onto this computer. Okay. Hi for now. All right. So, um, did are we doing GJ or was there another pair, Henry, that we're doing?
I think
No, I thought we were doing GJ.
Okay.
I didn't take time to look at nothing else.
Okay, that's fine. So this will be perfect. All right. So we're gonna walk through this here. Basically, pretending like I'm gonna start pretending like from the beginning, like I did with my girls last night. So when we sit down and we start looking at sit down and start looking at the monthly. All right. What we see is the first thing that we see at least what I see is I see that prices keep making it keeps making a set of we got a high right here, we got a lower high, and then we got this area right here. Okay. So the second thing that I see is that I see pretty much this here floor sitting right here. So when you start thinking about support and resistance and Cantor, this right here is like the meat and potatoes of literally what I do.
okay.
So support and resistance, basically, a lot of times what we were taught was that, for example, what we were taught, like, and people have this misconception that this area right here is support and resistance because price comes here, it breaks and it sits, and then it comes back and then it sits again. But here it is that it breaks, and because it comes back in retest, and let's say if it fail, then now they say, well, this is support and resistance line. Well, that's not exactly true. Okay, at least not in this here area right here, because what true support and resistance is price comes to a wall and it can't go through it. And if it does break for a reason, like this long candle right here, this basically says that there's an institution in here that basically they came in here and they said, look, we got a bunch of tickets we need to sell. So what we're going to do is that, we putting that in the market, and then all of a sudden, boom, price fell. These little ticks right here, these are like, this is like guys like us, retailers. But when you start seeing these here big old candles like that, that's basically banks and institutions moving the market in the direction that they want it to go. Okay.
Okay.
This little consolidation right here, that's just retailers. That's all it is. That's retailers saying, look, okay, I'll give you $5. Okay, well, I'll give you $7. Now I'll give you $6. Okay, well, I'll give you 650. But then the bank steps in and say, look, I got 50 million. Well, there's no takers in that for 50 million. So now all of a sudden the bank's sitting here and they're gonna dump 50 million. They're gonna say, are there any takers for 50 million? No, there's no takers. Boom, price falls. Okay. That's how that works. But this is what happens though. Now price keeps falling, 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 falling. Okay. Now, and then it hits a floor. Okay. It hits this here floor right here. And then it comes here, then it bounces. This is a true support and resistance line. This is a true support and resistance line. But the banks haven't left because they still got that 50 million in there, right? So now what's happening is that now, okay, because see, remember, what the banks want is that they dump 50 million in the market. What are they trying to do? They're trying to make they're trying to make uh, 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 they're trying to double their money. So when you see these here big long candles like this is actually good for you and I, but it's actually bad for the banks and the institutions. Because see now what they've done 50 million they've done 50 million out here. They've done 50 million. Let's see here, 1, 2, 3. They've done 50 million right here, and they don't have no takers for that 50 million. So now basically the market falls hard. And then now it catches right here. So then the bank's sitting there again. They say, okay, well, let's see, we're gonna hold this here. So this goes from 50 million to say maybe 40 million down to now, let's say this is now 30 million. But then now we start they start back, I'm at, since at 30 million, now I'm at 30, let's say 35 million, and now let's say they at 40 million, 45 million. Now they're back to this here point right here, 50 million. The bank says, okay, look, is there anybody out here that want that can basically take this 50 million? Nope. Boom. Price falls again. Okay. And so that is the nature and the draw of the market. Okay. It is when we see these big moves like this, we know who's in the market and what they're doing. Okay. It will be the same difference is that if there was a long push candle going in the uptrend, it would be the same identical thing, just backwards. So when we see things like this, the first question is more or less, I said, well, why did that happen? And really, if we go to news, we'll see. We can track the news and look, and there was some type of event on this here particular, on this particular day. In this case, it's just a month. But there was, if we go back in time and do a research, and in October, there was something basically that happened in October that caused that market to do this. Okay. So when we're seeing these here candles form,
That
they're
was
not,
Brexit.
that was Brexit.
Yeah.
Bam. So there it is right there. So see, this doesn't happen just by happenstance or by luck or there's a reason every one of these here candles is forming. And that is why understanding, that's why the very first place I go to is in the day, the very first thing I do is I go to the news. See, a lot of times that when people trading these here indicators and stuff like this, what they're doing is they are, for all intents and purposes, they're gambling. Because with Vegas, there's nothing to read. There's nothing to do. You just go in and throw a quarter in, and then now you're hoping that you're going to turn that quarter into $200. But when their odds are 20 to 1, 20 million to 1, well, shit, they already know that 20 million people got to come through there for them to let one person win. So we don't want to approach trading that way. We want to look at we want to be able to look at trading from a 3-point standpoint. 3 points. One is that's why when we start talking about like risk, right? Risk is one of the factors that we want to approach the market by. Okay. We want to approach the market by what is the condition of the market? What's going on in the market? Then we want to approach the market by what kind of leverage, how can we leverage the market? Okay. And so now we want to approach the market by how do we exit the market? So there's all these different facets of approaches that we want to do when we approach the market when we're doing trading. Because if you're doing anything else short of that, you're not trading, you're basically gambling. And so that's why I say that if a person can't tell you, see, I can sit here now, literally, because I explained that, you know why this happened. And so now it makes sense. You should be like, well, goddamn. So that's why that happens. Price got here. There's money in the market. Brexit happens, and basically they say no. Boom, price falls. Okay, and so here, when people get in and they start trading based off of indicators, an indicator will never tell you that this is going to happen right here. It'll never tell you that. Because an indicator, remember, an indicator is back in time based off of an average. But if you look at the average, look at this candle here. What is the average of what the candles were doing in the past? So if you look at right here, if we just look at right here, the average of what the candles were doing in the past, the market was in an uptrend. The market was in an uptrend. So no indicator, minus the RSI, no indicator will, these indicators are lagging behind. But even with the RSI is not going to tell you, it'll tell you that price has been overbought right here. But the RSI is not going to tell you how far price is going to go down. Because remember, it's going to sit up there at above 80. It's just going to sit there and it's going to fall. And it's going to keep falling until it gets down to 30. But then what is it going to do? Well, I don't know if this is 30 I don't know what the market is doing. Because now what happens is the market is continuing to fall. So what we want to do is have a multi approach to the market. Not just one approach, but a multi approach. Because if I can't tell you why this here happened, if I can't tell you why this happened, then I can't tell you how to trade it. If I can't tell you why this happened, I can't tell you how to trade it. But if now in the future, so watch this here. So now here's something that I know to be fundamentally correct. I know now that when price hit this point here, hit this here line, I knew that this was a strong resistance point. So I know that because I got this here area marked. So now I'm going along about my day, going along about my life, going along. I keep going along, keep going along, keep going along, keep going along, keep going along. Ooh, bam, look right here. So now we sit down and we talking. I say, damn, I say, guys, look, you see the market getting ready. The market is basically coming back up to 2356, 23.56. And now we know that the last time the market got here, we know what it did. The market broke, and it broke hard. So now we're going to basically sit here and we're going to figure out what is the market going to do. Bam, it did the same identical thing. But this time it didn't go as far. Well, I don't know. Because see, if you look at the crossbar, price got to this here same identical area. The same identical area. Consolidated. Let's see if it's consolidating. Consolidated. Bam, did the same identical thing. Look at it. Same identical thing that it did.
That's crazy, man.
And so look, same identical thing that it did. It came to this line, it broke through. Somebody got back. Somebody basically came back into the market because look how the market was rescued right here. Because look at how long these here candles are. Look how this is straight institutions right here. People are taking money out. They're basically getting their money. This is all what that is. People are getting their money out of the system. Somebody comes in and basically injects some money into the banks. Did they do it fast enough though? No, they still hadn't done it fast enough. There's still no confidence because this is all retail traders right here. This is all retailers. All retailers eating off of this here. Okay, so now the market is starting back to stabilize. There we go. Market is stabilizing. Retailers are in the market now, they're buying. Okay, the market is stabilizing. Okay, we're in consolidation. The banks are going, let's see what the banks are going to come back in here and they're going to say, well, look, let's see what we can do now. But don't matter. We're still in the downtrend. The market is still not strong enough because now we had this high right here. And now we haven't even, we're not coming back up here because what did the market do? It broke. So when we begin to understand, like now, what's happening in the market and you talk this market out, it's just a matter of talking the market out. It's like I tell these kids, it's like when you go to Starbucks and you meet a girl for the first time, I tell them, I said, look, I'm not buying no damn mocha latte, venti caramel macchiato on a blind date. I'm not doing that. You're going to get a tall coffee. And that means that I'm $3 in and $3 out. I can't go over $3, Contrail, because look, it may not work out for me. I just don't know. Henry gonna take her to Outback Steakhouse because see, he got it like that. But see me, look, we going to Starbucks, and that's really a little bit too much because actually what I found out is Racetrack has really, really good coffee, better than Starbucks. But I just don't want to appear cheap. So right. what I'm gonna do is I'm gonna take you to Starbucks and we're gonna get a tall coffee, and then we're gonna see if there's see if there's a connection. See if I understand you.
I said we're gonna talk it out.
Yeah, and then look, the second time, guess what you gonna get the second time? She's gonna get another tall coffee. Because see, the first time was maybe, I don't know. First time, look, I don't know. First time, I don't know. Maybe this was a fluke. maybe the market comes back, and then this time it breaks. Well, now the second time, the market did it again. So basically, this market is basically this here being kind of like, if I can call this here kind of like, kind of like our best point or best point in the market. The market is not getting back up to this point because it's still in an overall downtrend, and it's not coming back up to these highs right here. So that means that now there's still uncertainty in this here particular market, and people are still taking their money out of this market. Look at how long these here candles are. Consolidation means that the banks are trying to stabilize. Okay, they're trying to stabilize the market. If they can't, and so the bank comes here and says, look, we're gonna put 50 million in here. Nope, no takers. No takers. So that's literally the art and the science. It's both art and it's both science, um, um, of how you now trade the market, because you got to understand why things happen, how things happen, and then finally when. And so now you say, well, when? Now we sit here and we say, well, hmm, when are we going to take a trade on this, Anthony? Let's talk about that part. Okay. This is straight consolidation right here at the top for all intents and purposes. That's straight consolidation right there. When am I going to trade this? On the breakout. That's what I'm going to do. I'm going to trade it on the breakout. And then I'm going to sit here and it doesn't matter what time frame. I'm going to trade that on the breakout. That's almost 5,000 pips. This is on the monthly. I'm going to trade. When are we going to trade this one? On the breakout. That's all I'm going to do. I'm going to let it hit. I'm going to let it hit this area. There's going to be consolidation in there. Okay. I'm going to set me a strike point. And when price gets there, I'm going to enter in. And then I'm going to enter in below this line. I'm going to set my stop loss way up here. And now if you look at this here, did the market retrace? No, it didn't. Because there was so much momentum in the market. Even when it did do the retrace, my stop loss is still way up here. That's how you trade. X's, O's. All that other stuff, I don't know what they be doing. They buying Ventis and caramel macchiatos and things that don't make fundamental sense, and they over leveraging themselves. They don't have because see, watch this here. This is something somebody said to me, and it made a whole lot of sense when I was watching this here dude. And he said that you have to have a strategy to where it's that no matter what the market does, because the market change. That's why I asked the question, like, what does the market do every day? It changes every day. You've got to have a strategy that's going to work every single day, no matter what the market does. Drawing all these here things on and I thought about this because I like trading patterns, but then does the market make patterns every day? Nope, it doesn't make patterns every day. But the market does support and resistance every single day. Every single day, the market does support and resistance. On any given time frame, the market does support and resistance every single day. That's all it does. Does it do patterns every day? Nope. Does it do pennants every day? Nope. Does it do flags every day? Nope. Does it do head and shoulders every day? Nope. Does it do W's every day? Nope. Does it do M's every day? Nope. Doesn't do that every day. There's not one W in here. There's not the market maker strategies. The market maker strategy in here. There's a double bottom. There's a top right there. Maybe that's that. But see, but here, it's not in here every day. It's not every day.
Bro, that just really, I just had a light bulb moment because of something that you just said. Like you said, because we've seen, like you said, the head and shoulder, double top, double bottom, all of that. And like you said, and as we're looking at right now, it don't do the same thing every day. But what it does do, Is breakout.
It breaks out every day.
I just had it like, and that may be to y'all, that may be like, damn, nigga, that's elementary. But for me, it's like, bro, that was an aha moment for me.
No. And that's what this is supposed to do. You're supposed to look at this here chart now and basically, because see, here's the thing. You say, well, teach me how to trade like you. Teach me to see what you see. No, I don't need to do that because you already know. We just got to kind of like work with what you work with it just a little bit, kind of fine tune it just a little bit. And now the only thing you're going to focus on is trading breakouts because the market does breakouts every single day. Whether it's in an uptrend, whether it's in a downtrend, whether it's in an uptrend, there's a breakout right there. You got a little bit of consolidation. There's your breakout. Okay. Here, you got a little bit of consolidation. There's your breakout. Okay. And so even because I like trading candle patterns, but see, here's the thing I learned. Does the market give me a perfect shooting star every time? Nope, it doesn't. Here's a shooting star right here. That's confirmation. But look how the market does. The market threw this here damn hammer right up here. This hammer is supposed to be at the bottom of a downtrend, signifying what to happen next. The market is supposed to go back up. So for all intents and purposes, this probably was a fake signal, because that is a hammer right there. The perfect hammer, long wick, the wick is just go look up what a hammer is. It has a long wick. The wick is twice the size of the body, and it has little to no top on it. Little to no top on it, and it is preceded by a downtrend. But for all intents and purposes, what are we in? We're in an uptrend, but you can say, well, this was a downtrend right here because the market went down. But look what happens here. The market is supposed to go back up based off of what the candle patterns say. This, on its purposes, was a fake out. But do I care about that? Because once this here candle here forms, I'm going to hit that high, and then I'm going to hit this right here. And now, when price breaks out of here, then I'm going to get in. So now, Kendra, tell me what's wrong with tell me what you see when you look at this, because I'm saying when price breaks out of here, I'm going to get in. But tell me what you see. Just by looking at this here, tell me what you see. You got this candle, this candle, this candle. You have this candle. Tell me and then you got this candle. Tell me what you see.
As far as what though? I mean, it's just.
So my breakout strategy would be, okay, so think about my breakout strategy.
So it hadn't broke below that area down there.
That price hasn't broke. Okay.
189.86 that you got marked.
Mm-hmm. So what I see, and you're right, because see what happens is this is where now your strategy now says that price has to close. It has to close, because this here again, price comes out of here, and then now what it does, it breaks this, but it doesn't close.
So when you say breaking it, is there another zone that you would actually have marked there? Because what I'm looking at the white, the top line, the bottom line. And so I'm considering that whole area is your zone area. But you're saying there's another line that would have been marked there, right? Another zone area or whatever.
Well, not necessarily, because I'm saying that once price, if this is my signal right here, then now what I'm waiting for is a breakout, because let's go down to the weekly, and then you're going to see this here. Okay, see, there it is right there. You see it a little bit better?
Yeah.
See how price is just basically, it's just hitting.
Yeah.
It's staying right in this here area. But look, see how it broke out of there? So now let me show you this here. This is going to really freak you out right here, because this is what price tends to do, and this is where people get caught. Okay, what happens is that when price breaks out of this here zone here, and notice this is a support line.
Correct.
When price breaks out of here, what does it do?
Gonna retest that area.
It's got to retest to make sure that it's good. And once it retests, now it's coming out of there.
Yeah.
So that's why if you're trading one time zone, one time frame, you gotta hop down to the lower time frame so that way you see what's going on. Okay? That way you have your perfect entry. Oh, let me go back over here.
Hey Anthony,
Yes, sir.
like on that hammer, if we were to, let's say we set our sales stop and on the price where you said it has to break up under.
Mm-hmm.
So would that hammer come down and activate it and then take us back up with it? Or does it activate once a candle closes up under that?
It's got to close. But what we're going to do is that we're going to be further enough underneath it so that way we don't get caught.
Okay, because from what I saw, we would be at the our sales stop would be up under the wicks, right?
Right.
Okay.
But even if for some reason we were activated, you know, because the way I know it is that price has to close below your below your sell stop. Okay, it's got to close. Now it may, and there's also your margin. So your margin and everything has to close. Okay, below it. But here's to the point that I was making. Let's just say, for example, that we had our sell stop like literally like right here, and let's say that this candle here did come here, and let's say that it did activate it, okay, but it just went up just a tad bit, okay, all right. The very next candle now, because this here candle here, this candle here then would be the open. This would be the open. Now what happens is that this candle here does not throw a wick back, thus hitting our stop loss. Does that make sense?
Yeah.
Yeah. So this candle here doesn't throw a wick, and this candle doesn't throw a wick that is now going to take us out because we're down here low enough. Okay.
Okay, so you saying that's what I was just about to
Yeah.
ask. Why are you saying that? Because we've gotten hit like that, but you saying we probably got hit because we
wasn't
weren't
low
low enough
Exactly.
to
Exactly.
avoid that wick forming on us.
Exactly.
Okay.
So when we're doing the matrix, when Henry's putting the matrix together, I can sit all day long and say, well, I can say 30 pips. Okay. But here's the thing that I noticed about like a lot of the calculators. The I can say 30 pips, but watch this here. If I say 20 pips, then guess what happens? Both my profit and my lot size increases, because now what I'm doing is that I'm risking less. And because I'm risking less, it is going to give me more of a reward. If I go to a 5 pip, um, if I now what I gain is still going to be the same, but now what happens is that the lot size increases. Okay, the lot size increases. My reward is still the same. My loss is still the same. Okay, I'm going to lose $5 and $5, but the only thing that happened is that now my lot size increased. So that's why, like, literally, like, one of the best tools that you can like use is going to be one of the best tools you can use is going to be get this out of here. Okay. One of the best tools that you can use, let's do this here, is going to be my FX book. And so, Henry, what I would suggest is definitely like come in here, my FX book, and then like in this here area, whether it's pip calculator or position size or margin size, these are going to help you like do like a lot of the stuff that you like to do.
How does margin size work? What exactly is that?
Help you to calculate easily required margins for your positions. I don't know. I haven't dug down in it enough. So basically, what if I could attempt to explain it? We're gonna trade GJ, and let's say my trade size is 50 pips. My margin is 100 to 1. So basically, as soon as I got to get above 0.64 in order for me to be in profit. This is the house's money right here. That's how I look at it. You know how when it's going like it's like you're in like 0, 0. You know, it's the money's all negative.
Yeah.
You know how it's all negative, and then all of a sudden it goes 0, then it goes green. Well, if you go into MetaTrader and you look at like how those lines are moving, you know, what's happening is that there's a margin. That margin may be 2 pips, it may be 3 pips, it may be 5 pips. That's the house's money right there. That's their margin call. And so now what this is saying to me is that once I get past in money, okay, once I get past in money 0.64, now I'm in profit. Okay. So now your calculator over here for your position size, again, you know, you got $10,000. Your risk ratio is say 5%, 40 GJ. Calculate. You got $1 lot size, 1.35 is your lot size. If you're right, for every 40 pips that you hit, you're going to make $500. But if you're wrong, you're going to lose $500. You can play with this here number here all day long. Can't you see how my lot size went up to 2.7?
Yeah.
But look, I'm still making 500. If I lose, I'm going to still lose 500, but now I got less pips to make now. I got less pips now to make 500. So watch this here. If I do this here, look at there. Five lots. If I'm wrong, I'll lose 500. But
so you're still losing okay, and this is cool because so regardless of what, you're gonna either win an amount or you're gonna lose the amount. It's just a matter of how many pips it's gonna take you to lose that shit.
Yeah, well, at 10 pips. So when I start talking like a 1 to 3, 1 to 4, 1 to 5, 10 pips is this first 10 is 1. So now 1 to 1 is if I get 10 pips, I've made 500. If I get 20 pips, I've gotten 1,000. If I get 30 pips, I've gotten 1,500.
Right.
40 pips, 2,000. 50 pips, $2,500.
Right.
But watch this here. If I lose 10 pips, I've only lost $500. See, that's why I literally like now, at first, like the way I was trading was kind of like wrong. Because see, now I can take 50. So like now when you start hearing me, this is why I say how I teach my others kids that you got to come out, do 37 trades, and then have an 87%, be at above 80% accuracy. Because if you're above 80% accuracy, you can take 5 trades, miss one, and that one won't even matter because you just lost $5. But on the other ones, if you get 20 pips a piece and you're making, say, $5 for every 10, now you got 10, 20, 30, $40. $40 and you just lost $5. I will take those odds every day of the week and then twice on Sundays. But if I've taken, watch this here, if I've got if I take 4 trades and now I've lost 3 of them, let's say I lost 2 of them, and now that's $10. Okay. Now, do I need to take the next 2 trades? Maybe. But let's say I lost 3 trades in a row. Do I need to take that 4th trade? I've lost $5, $10, $15. If I'm right, for 10 pips, I've only made 20 pips is only going to get me, if my goal is 20 pips a day, 20 pips is only get me $10, but I've lost $15. That's always my mechanism to make me stop trading, because you don't want to do no more than 4 to 5 trades a day.
Right.
And if you're losing 3 in a row, that means that the last 2 are not going to be worth it. Because what's going to happen is that now you're going to be revenge trading to catch up to get out of that hole. Because remember, you're only trying to get 20 pips. And if 20 pips will give you $10, okay, you've already lost $30. So now you got to keep trading in order to get out of the hole. It's kind of like when you go to Vegas, it's the same identical thing, right? Once you lose, you got to you're going to keep playing to get out of that hole.
Yep.
Whereas that, to me, what I say is this here, I'm going to play until I make the house's money, until I make my money. I'm going to play until I make my money. And then I'm into the house's money.
And then if you do lose it, it's their money and you ain't really psychologically messed up.
Exactly. So if I'm doing a 1 to 3, that's why 1 to 3 is perfect. Because if I do 1 to 3, that means that I'm trading for free. So 1 to 3. So let's just say 1 to 3, I made $20. 1 to 2, I made $20. I'm gonna go put my $20 up. And now what I'm gonna do is I'm gonna play off the house's money. And so now whatever I win, that's the house's money. But if I lose, guess whose money I lost? I lost the house's money.
Yep.
See, that's why I said initially. See, now it all kind of circles back around to why I say everything that I say. When I said, no, let's start off with $50, because now what I wanted to do is my risk of everything that I'm losing is just only $50.
So do you mind putting that $50 in there and the 20%, then walk me through the like you were saying, the 1 to 3, 1 to 5 thing again?
Okay, so basically, let's just say we have a 20 pip stop. Okay, so risk is 20 pip stop, count size is 50. If I'm right, if I'm wrong, I'm only going to lose $10. Here's my lot size. Okay, so now that means that if I'm going 1 to 3, 1 to 1, I've made 10. Okay, so the next 20, I'll make 30. The next so when I get to 40, I'll make 30. When I get to 60, when I get to 40, I'll make 20. Okay. When I get 40 pips, I'll make 20. When I make 30 pips, then that's when I'll make $30. 60 pips will give me $30. Sorry about that.
And so let me ask this question, and it may open some shit up. So with that 0.05, and let's say Henry decided to get into the trade twice, that will break that lot, that 0.10 down to 0.05 2 times, right?
Right. Exactly.
So you stand, regardless, you stand to lose that same $10.
Exactly. It doesn't matter how many accounts you put, how many. So see, this is the thing now where it gets into this right here. You can divide this here into however many you want to. You can divide this into 5 and now do 5 separate trades in 5 separate accounts. Each account is going to lose $10. Even though, if you're correct and you only have to get 10 pips.
Mm-hmm.
So now that means that you can do 2 pips for every, so if you got 5 trades, you only need 2 pips per trade in order to get that 10.
So 2 pip. Okay, so if we go for point, let's say let's break that down to 5. That'll be 0.02 divided, over 5 accounts. If we are correct, all in all, we're just gonna make $20 as a whole.
Mm-mm. No, you'll make $10 for every account that he has per account.
But if we lose,
You're going to lose $10 per every single account.
I got you. Okay.
Yeah. Yeah. See, that's where now, like, because if you're going to do 8 accounts, well, then you're going to lose $80 if you're wrong. Excuse me. Yeah, exactly. You're going to lose $80 if you're wrong.
I got you.
Okay. Now, so at the most you can really have is that if you got 5 accounts, excuse me, if you start with $50, you only want to do 5 accounts. If you have $80, well, maybe at that point you can do 8 accounts.
Right.
Okay. But that's where now, like, if let's say you got $100, well, okay, don't go do 100 accounts, because see, now you've lost $200. You've lost way more, because now you're saying that so to me, if you say $100, take this $100 and now divide it over, and maybe that's how you do that. Maybe you take the $100 and now let's say you're going to do, let's take $100 and now do, do what, 40 in each account. Excuse me, 20 in each account. So this right here, Henry, is going to be like your new toy. You go play with this and figure out now how to do your risk and your leverage. Because see, this is like literally when you tell me, like, I'll pull this up on my phone, and now if it makes sense, it's going to make sense. And then now, Cantrell, you use this also. Now all 3 of us will always be on the same page in terms of risk. We'll know if we're doing too much. So let's bust over here to finish marking up. All right, so let's see where we at, because I got a class coming up. Okay, so basically, let's take this out of here, get rid of that. All right, so we got support, we got resistance, we got a trend, we got resistance. So now what we're gonna come here and do is we're going to put, it's safe to put a trend line down here because that held. And then now also, watch this. And this line right here, this line held. Now you notice how I did this here differently. Get this trash out of the way. Okay. Instead of marking these lines like all the way through like we've been doing, I've kind of stopped doing that. Now the way I'm doing it now is like this. Because see, When price got here, it bounced. This line held. Then it went up. When price got here, it bounced. It bounced here again. This line held.
Yeah, much cleaner chart.
Much cleaner chart. Versus like all this here going through and stuff like that, which those really, that's not accurate to do that like that. It's more of here, it held. Right here, it held. Right here, it held. Right here, it held. And that's relatively true right here. See, it's relatively true. It got there, came out of there, you know, that's relatively true. So now what we're doing is that, you know, what we're doing now is that we're pretty much, this is what we're doing. We're pretty much boxing price in. See this? Boom, boom, boom. We're boxing price into this here little, we're running this here rabbit into a hole. So either he gonna go here, or he gonna go up, or he gonna break out, or he gonna break out, because we got him boxed in. You know, and then now it's a matter of a trap here or a trap there, or we just trade him every time he hitting until we got a trap set. Okay, so this is the monthly. This is the weekly. Still holding, doing the same thing. This is the daily. Still doing the same thing. The reason why we want to do the monthly is that because the monthly is going to take precedence over any other time frame. Okay? The monthly takes precedence over any other time frame. Anything that I draw from the monthly is going to take precedence on any other time frame. So now we get into, okay, here's a pattern right here. There's a double bottom. There's that retrace. Okay. Here's consolidation. Well, actually, no, it's not consolidation, because look, price got here, and then look what it's doing. It's breaking. Okay. So now what we got to do is that we got to let this here action right here happen. So right there, that's our mark right there. Right there. So let me ask you this question right here. You see how this here candle, let me see if I can make this here work. All right, so there's a couple ways that, hold on, let me do this here before I get into that. Okay, so we got a high right here. We got our low right there. Okay, so we're gonna set this up so that way we're gonna start getting ready to make a trap. Okay, and then we got this piece right here. What is price done? It broke out. See that breakout right there, and then it retested. It held on the retest. Bam. Okay. So now,
Hey man, bro, hold up.
Can't trail now. Look, come on now.
Say, bro.
Hold on. Let me start. Let me do it again.
No. Hey, I got it, but I'm seeing how you just did that. So you marked it on a low. We set a trend line, ran it up.
Price broke, retested, came out of there.
Bro, that shit crazy.
So basically, the only thing, so watch this here. You say, well, hold on. Let's just pretend like none of this here up here happened. Let's pretend none of this here happened. You know, the first thing I'm going to do is, as soon as that double bottom happens, you know what I'm going to do? I'm going to do this here. I'm going to do this here. As soon as that double bottom happens, and this happens, because why? I have a trend now. I got a certified trend. It takes 1, 1, 2. And I'm just going to lay that there. None of this here right here has happened.
Okay.
None of this has happened. But I got this here laid right here, and I got a trap set. Okay, I got a trap set, and so now my trap. Look what happened. Price broke out of there. It came back and retested. Broke again. Came back and retested. No, you ain't getting out of there. But this is what's happening. One, it made a high. It made a lower high. So that's one. That's still a trend. One, two touches. You got to connect them.
Mm-hmm.
Okay. One, two touches. You got to connect them. So see, now we got price. So all this, so actually like the flags and the pennants and stuff like that, this is kind of like where those flags and pennants and stuff come in at, which I don't really trade those because I always tell people like, I don't get it and understand it. But like when I be like explaining, it's like, oh, well, no, you do get and understand it. Because watch this here. Price came in here. One, two. This is where I always mess up. So it's like, it comes in here. So then it's one, then it's two, then it's three, then it's four, then five. It's coming out of there. But look, it sat right there. It sat there. Why did it sit right here? Why did it sit? Because the last time, this line right here, it held. It held. And so here, it held, but why didn't it go any further? Because it was attempting to make a higher high. But no, you can't make a higher high because right up in here, the power of this area right here said, nope, you're not making a higher high.
Because that trend line acts as a resistance line.
Exactly. The trend is acting like as a resistance. One, two, it's full resistance.
Bro, like what the, like
Henry, get Trail off this call because he's being disruptive.
Say, man, I'm gonna disrupt your group, man, because I'm looking at this, and it's like, dog, we've been trading all these months and never got this understanding, and now I understand why things move the way they move. Like I'm excited, bro. So y'all got to excuse me, man.
Okay. But
go ahead, keep going. I don't mean to disrupt your group.
Okay, but let's talk about from the past. Who is this right here? Who is this?
Banks.
Bank got up here and said, "Look, can y'all who want this money?" Did nobody take it? And so watch this here. I can take and do this here, right there. Price came back. It doesn't matter how or what or when this was going to happen. What was going to happen was that when price still got here, it's basically going to break.
Because the last time it went there, nobody bought.
Exactly. This is that whole supply and demand zone right here. The bank is sitting up here trying to collect these tickets, trying to get buyers in here. They're trying to get buyers in here. There was no buyers, so he fell out. Then he's coming back, and it's like, no, we don't want it. So now you got this huge big sell-off. Somebody stepped in this here market and basically sold off.
Bro, I'm finna do some damage with this shit, bro. Like
So what let me ask you this here question. What is this? This is a wick right here, right? See that wick right there? Tell me what this is. What is this wick?
I would say it was some buyers attempting to try to like buy in that area and make. That's what I would think.
Okay, what you think, Henry?
Is this when we were supposed to look back left and see what had already happened?
I mean, I'm just asking what you think it is.
Yeah, because that other candle, that green candle on the other side has the same wick, pulling it back up.
But remember though, support and resistance. We right here in this area. Price came right here, and then it basically stopped.
And that's the resistance.
Right. This is going to be a support. Resistance at the top. Support is down here. What this is? Watch this here. Look at that. Look at that. Look at that.
But that's what I'm saying. So doesn't that turn into it? Doesn't it make it resistance for the sellers now? And it's a,
Mm-mm. No, no. The answer to the question was, these are candles.
okay.
These are candles. So now, when I go to the lower time frame, look, there it is.
Oh, I got you.
When I go lower, price came here. What is it doing? It's retesting. Okay, it's doing a retrace.
So then my answer was partially correct. That's buyers actually trying to get in there and push that shit the other way.
Yeah,
But I understand what you're saying. But that wick represents multiple candles on the lower time frames. Is what
exactly,
I,
exactly. So now, watch this here. We're gonna set a trap. We're gonna set a trap. Now, is price gonna go back up this way? I don't know what price gonna do. I don't know if it's gonna go back up there. Price could. Now, look, I'm on the 15-minute. Price could go here, but look, okay, but look, okay, look what price happened when price got right here. Who's this right here? That's somebody big in the market right now. So basically, we're gonna set that right there. And so now we got momentum. Momentum. Look how these candles are breaking down. Retailers are in the market now. Let's make this bigger. Retailers in the market. No more big candles. So now what we can sit here and do is do this. Draw that right there. Right there. And now we're sitting here, right here at a resistance, at a support line. Now what we're gonna do is that what I think price is gonna do is that price is basically going to say it's gonna get here and then it's breaking out of there. That's where our trap is, down here. So we can set an entry for 137.060. It's going to retest and then break out of there. And that's the daily. We're basically going to be on the daily and the 4 hour. We're not going to touch the 15-minute unless we're trying to go down there, unless we got a long wick and we trying to see what that wick is talking about. That's it.
so, bro, that is crazy, man.
That's it. So now this is a this is a pattern. This is a pattern. So what we're gonna do is we're gonna set, so like my next area that I'm interested in looking at, my next area that I'm interested in looking at is right here.
Mm-hmm.
That's my next area, and then finally here. Now, I'm also interested in this area right here.
Yeah.
Kind of, sort of. It's technically not a supporting resistance line because it broke through. It's technically not.
So
Because
support. Okay, so let me make sure. Let me run to you my understanding. So support and resistance. Support obviously is the ceiling. Resistance is your floor, your base.
the other way around.
So resistance is the ceiling.
Yes. It's
Support
resistance.
is your floor. Okay.
Right.
And they're only defined because
They
price
held.
doesn't break through either way.
Exactly. Exactly.
Okay. All right.
Exactly. Exactly. So
I
yeah. So when price got here, it held, and then
support.
it
I'm
went up. Right. It's support. So
Yeah,
now
yeah.
when price gets back here, it very well now is going to do this. It'll do like this. It'll go here, it'll go down, hit here, and then go up, back up to here. Back up to test our trend line.
But in the meantime, between time, we can eat off that going down, huh?
Yeah, we can eat that. See, that's why
Oh.
when you said to me that you only needed 30 pips, And I'm looking at you like, really? Really? Is that you're saying that's all you need is 30 pips?
Bro,
Really?
it. That's it.
We don't have to trade nothing else. That's why when I first met you, you say, look, I only need you give me 30 pips and I'm just gonna spread that out. That's why I said, really? Is that all you're saying that you only need 30 pips?
I only need $20, bro.
Okay, but this right here in terms of pips,
No, I know I'm messing with you.
I'm like, really, really? And now if my analysis is right, if we catch this here right and just let that thing just ride, this is on the 4 hour. Check the charts every 4 hours. And now the sentiment is that okay, so here's a spot right here. Let's go to here. So here's a spot that I'm interested in because price got to right here and it held. See, boom, and it held. So this is a spot that I'm interested in, and this is a spot that I'm interested in. So really, this could be a once price breaks here. This could be a entry right here, and then here, and then now your take profit. So this whole entire zone right here.
Yeah, and I like the way we drawing that where it ain't auto scrolled across the screen. It's just clean. It look cleaner to me, and I can understand it.
Yeah. So we don't need that anymore. That. So we have literally our support where price has been supported at, and now the only thing we're doing is every 4 hours. You know, we just coming in and I mean that's literally what I do. Is and so what's weird is that as you start to break down, look right here, there's another support line right there, which look, the reason why price is doing what it's doing, because watch this here. Let me show you something. Because you didn't see what I did. Watch this here. Okay. There's already see that line that's right there?
Yeah.
See that line? Watch this here.
Damn. Yep.
Right there. Right there. It's on top of it.
So when we set that trap, what the time frame we set that on was was that the daily? Where we set the trend lines at?
No, what we're gonna do is that we're always going to monitor. Where's this thing at? We're always going to monitor the really we're always going to monitor the 4 hour.
All right.
And then so we're going from the 4 hour to the there it is right there. Because that okay, yeah. So I'm just operating off the daily, but it's really the 4 hour. Okay. So then our entries will be on the 1 hour. Cause see that's where that candle is. See? So my candle's right there. I'm just waiting now for the breakout. See? Boom, boom, hit there, out. So right, let's see here, right text. So we'll do entry at we'll do entry at 137.028. We'll do a stop at we'll do a stop at 130. We'll do a stop at 138. 277, 138.277. I think that's what I said. 138.277. Yep. And then we'll have a TP1 of 135. One TP1 is 135.421. Okay, and then we'll have another. Do we have another one? Yeah, so then we'll have another one at, let me look and see. 4 hour, 135.421. Yeah, and then we'll have another at 130, 130.401. Then we'll have a TP2 at 130.401. Total pips 678.8.
And that's on the okay. You said we taking that on the 1 hour. You said or the 4 hour.
This is my entry. Okay, I watched the 4 hour.
Mm-hmm.
I watched the 4 hour.
Mm-hmm.
When I get ready to take my entries, I take it on the 1 hour.
Okay.
Okay. But this is just so if all this here lines up, this is for this entire period.
That's 678 pips.
Yeah. From basically from 137.028.
Yeah.
137. Okay, hold on. Let me do this right. Okay, so 137.028. And down to this here. Yeah. 600 and
Yeah, right up in there.
yeah, right up in there.
Bro, that shit.
That's it.
Bro.
That's it. Finish.
Sure.
So Henry, set your first entry at 137.028, and now just set it. And
So do we dismiss the one that we already had?
which one?
The one that we set on
No,
Friday?
no. Just let that ride.
Say, man, I'm finna be an assassin on this thing, man. I'm telling you. Because I understand it. Now I understand what I'm looking at. All I got to do is just practice doing it a couple times.
Yeah, that's it.
Because I understand this, bro. Like, I really understand it.
Yep. So like last night, I was with trading with well, I wasn't trading, but I was with some of my other students, and did on oil, it basically does the same identical thing. So supported resistance is going to work on anything. It's the way that you want to go. This again is the 4 hour. Okay. This functions and purposes is a head and shoulder.
Did we record this?
Yeah, I'm recording it.
Okay, okay.
Yeah. So it's the same identical thing. So now what am I waiting for now? So okay, so this is how I read. Let me show you how I read the market. Let me go back over here. I'm looking to see this here broke down right here. I'm looking for this. I'm looking for this here low to be equal, to eat up all this here liquidity. All the liquidity, I need to see if price respects, you know, if it gives it away, does it take it all back? I needed to see that. It gave it, it take it. It gave, it took it. It gave it, it took it. So I need to see that. Okay. So here, it gave it, it took some of it. Well, guess what? This is going back up, and it's going to take the rest of all of this over here. All this over here is going to be taken out because price is going to do this. Okay. So for all intents and purposes, it's the same identical thing, right? I got my trend lines. But see, gold is like, so right there, this is not, I'm saying this is oil. But what is it doing? What did it do? It did a breakout. Okay. Did a breakout. Here is, here is your resistance line because price got to there and then it broke down. It got to here. So what is it going to do? It's going to break down. Okay. So it held. Okay. So good. We got that part down. Okay. So I'm going to put this right there. Okay. Because price broke. Okay. So let me get rid of that because I don't need that. Let's get rid of this. I don't need that. Let's get rid of this. Let's get rid of this. I don't need that. And okay, let's get rid of that. All right. So now there we go.